Good morning, sir.
Morning. Okay, so today we are going to start account payable. Account payable, maybe you can say notes payable, maybe you can say trade payable. So anything you purchase from the vendor and credit is known as a account payable. Anything you purchase from your vendor and credit is known as a account payable. So anything is purchased from the vendor, either you say vendor, you say supplier, or you say creditors and credit is known as a account payable. Account payable is subledger. Therefore, anything or all purchases must be linked to general ledger. The general ledger name is reconciliation GL, or you can also say control account. What does it mean? It means that whenever you're posting any account payable related journal entry, you you post the accounting entry at the vendor master level. That is known as a sub ledger. So each accounting entry posting backend will hit to one of the jail account that is known as a reconciliation account, meaning that you may have multiple vendors. You have 2000, 3000 vendors. So whenever you pass the journal entry, let's say you're purchasing something from ABC vendor. So you'll pass journal entry like purchase account ABC to ABC vendor. Now this ABC vendor is known as a sub ledger. But this ABC vendor you are not going to show in the balance sheet. So ABC vendor will be linked to one of the GL account, and that GL is known as a reconciliation GL. So the moment you post anything in ABC vendor, it will also hit to the reconciliation GL, and the reconciliation GL is going to be shown in the financial statement or in the balance sheet. So reconciliation GL is like summarized value of multiple vendors. So like ABC, if I have multiple vendors, in multiple vendors, I have to link the reconciliation GL. I can link single reconciliation GL in multiple vendors, or I can, for domestic, all the domestic vendors, I can create one domestic reconciliation GL. For all the foreign vendors, I can create one foreign reconciliation GLs. So I can bifurcate also the summarization of different kind of vendors depending on the business need. So this is what called sub ledger and reconciliation GL. So whenever vendor comes, reconciliation GL will also come, or some company will say control account. In SAP terminology, it is reconciliation GL but some businesses they say control account. Next, account payable is short term liability. Short term or current liability. Anything which you purchase on credit basis from the vendor is company short term liability. Short term liability, and you know that liability is a balance sheet item. So your account payable will be shown in the balance sheet. Now to do the purchase activity, to do the purchase activity, you must have the vendor master or vendor number created in SAP. You are purchasing one laptop from the Dell. So Dell should be created as a vendor in your SAP. If you are purchasing anything from the Walmart, Walmart must be created as a vendor in SAP. If you are purchasing anything from, let's say you're buying the SAP software from SAP, then SAP company must be created as a vendor. Or whatever you're purchasing from whichever party, that party must be created as a vendor master or supplier master or creditor master in the SAP. So vendor master is a mandatory to do any kind of account payable related transaction. Why master data is required, I have already explained. Let's say you visit to restaurant, and if menu card is not created by the restaurant owner, then each customer will ask to the owner what are the item they're preparing, what is the price, what is the price for half, what is the price for full. But once owner create the menu card, then every customer can refer that menu card. They can use again and again to do the transaction. So in SAP, when master data serve same purpose. Once you create the master data, you can keep on using that master data for all the present future transaction. If let's say I'm purchasing something from you, then I can create your detail as my vendor master, and all my present and future transaction I'll be doing with that code which I have assigned to you as a vendor number. So vendor master is very, very important to do any kind of account payable related business transaction. Now, whenever a company does the purchase from the vendor, from the party, there are two major important points. One, either they are purchasing from the side or they are purchasing from the FI side. Meaning that there are two kind of purchases you have in SAP broadly. One, PO based purchase. It is also known as a material management side purchases, and another is non-PO based purchases. This is known as a FI side purchase. What is called PO based purchase? Or PO means purchase order based purchase. Whenever you want to purchase something for certain plant and you want to track the quantity, you want to track the quantity. If you purchase today 10 laptop, you want to track that I purchased 10 laptop for Bangalore plant or for Gujarat plant or for Maharashtra plant. When you consume the laptop, when you use the laptop, also you want to reduce the quantity available in the plant or in the storage location. So when you want to track the inventory at plant level mostly, then you have to use the PO based purchase. So PO based purchase has certain steps, but major purpose of using the PO based purpose is to track the quantity at the plant level or to track the inventory at the plant level. It has lengthy steps of the purchasing process. But whereas non-PO based purchase, ad hoc purchase, ad hoc, you don't want to track the quantity at plant level or inventory at plant level. Only you are bothering with the amount. Only amount you'll track. You'll just post purchase account debit to vendor account credit amount, how much amount. But same entry when you purchase from the PO based, you may say 10 quantity, rate is this and amount is this for this plant for this storage location. So you're tracking quantity, rate, amount, plant, storage location, and many more other features in your journal entry. Then that is known as a PO based purchase. So in SAP, you have two kind of purchases, one PO based purchases, one non-PO based purchases. Let's say, let's say when you want to eat the pan, pan beetle, then you instantly purchase it. You instantly purchase it. You don't start selecting different kind of vendor, then you negotiate the price, then you create the purchase order, then vendor give the delivery, then you do the payment. You don't do, you instantly purchase it. So that is like non-PO based purchase. Instantly you're purchasing, ad hoc basis you're purchasing, and you're not bothering about the plant inventory, lab inventory, all this you're not bothering. But when you have to purchase a laptop, then definitely you do a lot of research. So in company also there are something PO based purchases, something non-PO based purchases. So if you are purchasing PO based, so it has certain step. In PO based purchases, you create purchase order. Purchase order. Purchase order means in this you'll be, it is like agreement document in which you'll be telling from which vendor you are purchasing, what quantity you are purchasing, at what rate you are purchasing, when vendor has to deliver the material. All the terms and condition of your purchase you maintain in the purchase order. Then this purchase order may go for the approval process within your company. Then your vendor will send the goods. So you do the MyGo, that is goods receipt entry. goods receipt. Then vendor will send the invoice copy. So invoice receipt. You have these three step, minimum three step to make one purchase cycle complete. Then here you will do the matching also. There is something called two-way matching, three-way matching. You'll while posting the invoice receipt, you'll compare, because in invoice receipt, vendor billed you that I delivered 10 laptop at 30,000 rate. Then you have to compare, either you have really received 10 laptop, what was the rate agreed. So you have to compare. There is something called two-way matching, three-way matching. But in non-PO based purchase, this is finance side purchase. Directly purchasing. You are directly purchasing. Here your journal entry will be simple journal entry, maybe purchase account debit, vendor account. To vendor account. Now question arises in real time when you are working as an end user. Vendor send the invoice copy to you. Now in company there will be multiple purchase GL. There will be multiple cost center. Now which purchase GL you have to use, and in which cost center you have to post the journal entry, or for which internal order you have to post the journal entry. So for that, business will prepare one SOP document, standard operating process procedure document they will prepare. They will very clearly say when this kind of purchases come, or from these vendors we do purchases, please post in this GL and use this cost center. Some guideline they will give to their account payable clerk. But here there is no confusion in this process. The moment you post either goods receipt or invoice receipt, everything already decided in the purchase order time. Which cost center, what GL, what tax code, everything. But here nothing is decided. When you enter the journal entry, that time you have to follow certain guideline. You may also have to take the approval before posting the journal entry. Depends client to client. Because whenever you post the non-PO based journal entry, you have to choose which cost center to use, which purchase GL to use, what tax code to use. Okay, whatever amount is billed is correct or not. So this is known as a non-PO based purchases. Now, as I said, to perform the account payable journal entry, you must have the vendor master. Vendor master is a mandatory. Without vendor master, you cannot post the purchase journal entry, because in every account payable journal entry, vendor will come either in the debit or in credit. Then only it is known as account payable. If vendor is not coming in debit or in credit, then there is no point of saying it is account payable related transaction. So supplier master is mandatory. Or AP transaction. Now, if all your purchases are happening in SAP, then it is easy. It is easy implementation. But these days, lot of purchases are happening in the third party tool, and they are interfaced with SAP. Let's say you have Concur. Yeah, there is one tool called Concur. So whenever employees are going for any office work purpose, if they are spending money on the telephone, or they are spending money on hotel or in the flight, they are booking the expenses in the Concur. When they book the expenses in the Concur, accounting entry should be generated in the SAP. Or let's say your company has interfaced your SAP with Amazon, Flipkart. So whenever you purchase anything from Amazon as an employee, accounting entry is posting in the SAP. Ideally, this is not the case. They will give you the coupon code, but assume there are a lot of third-party tool where company will be purchasing from the third-party tool, but accounting entry must be posted in the SAP. Let's say Coupa is there, Beam software is there, Tungsten is there. Lot of tools are there. So that makes little your implementation difficult. And another very important point, whenever you do the purchase on credit basis with the vendor, something called terms of payment is also required. Terms of payment, people say payment term. As we are selling that account payable is a credit transaction. So after certain day, you have to make the payment to the vendor. But after how many days? So that is decided in the terms of payment. So terms of payment basically deals with credit period and discount. Let's understand here. So let's say you purchase today and your vendor is saying that I'm giving you 30 days credit period, or you make payment after 30 days. So today date is known as a baseline date. So baseline date plus credit period. For how many days credit is given is equal to your net due date. Net due date is calculated in this formula. Baseline date plus credit period is equal to a net due date. Today, you purchase something today. If your vendor is telling that I'm giving you 30 days credit period, then count from 30 days. And where it will come? It will come somewhere February 8. So this is your credit period, net due date, meaning that on this date or by this date, you must make the payment. So baseline date plus credit period is equal to your net due date. In SAP, net baseline date, which date will consider as a baseline date? So there is something called document date. Either you can consider document date as a baseline date, posting date as a baseline date. You can consider posting date. You can consider entry date, or you can whatever you want to enter, that is called no default. So this 4 option is there. So whenever you are creating any terms of payment, you have to choose which date should be considered as a baseline date. Either document date, posting date, entry date, or no default. No default means you can enter your own date. Plus credit period, you have to tell 30 days, 40 days, you have to define. So baseline date plus credit period is equal to net due date. So terms of payment will give you net due date, plus it will also help you to determine the discount in case if it is applicable. Let's say your vendor says that pay me after 30 days, but if you are making payment in 15 days, I will give you 1% discount, 2% discount. So both this we can configure in the terms of payment. So terms of payment is equally important in account payable transactions. Then whenever you purchase, another important point may come, something called down payment or advance payment. So many a time vendor will say that since it is credit transaction, if you are going to purchase worth of rupees 100,000, vendor may say that please pay me some advance or some down payment. So down payment is also important business process in account payable. So you have to know how to handle the down payment process or advance payment. It is known as a special GL transaction. To differentiate between normal payment to the vendor and down payment to the vendor, you have to use one indicator. That indicator is known as a special GL transaction. Because whenever you make the payment to the vendor account debit to bank outgoing. So in SAP, in down payment time also same journal entry, and normal payment time also same journal entry. So how to differentiate which is down payment, which is normal payment? So there is one indicator you have to handle from. So that is known as a special GL transaction. You'll understand in more detail. So it is very, very important knowing the special GL transaction or down payment process also. Now, if I summarize, so your account payable happens, let's say purchase, let's say invoice posting, in shortcut, invoice posting. Vendor will send you invoice, either you purchase PO based invoice receipt in invoice posting, or you directly post on non-PO basis, but you post the invoice, then you have to do the payment to the vendor. Invoice you post, then based on your terms of payment, you have to make the payment to the vendor, then you have to do the reconciliation, bank reconciliation. So here invoice posting, invoice posting, either it will be from the side, that T code is known as a MIRO, or from the FI side, that T code will be FB60. Okay, there are other so many T code. Now payment to vendor, payment either you can do from the automatic payment program, that is F110, or from manual payment, that is F.53. So when you do the payment, your journal entry will be vendor account debit, bank outgoing. Bank outgoing account. When you run the bank reconciliation, again, either it can be automatic or it can be manual. Then your journal entry will become bank outgoing will go to debit to main bank account. Okay, this is the process you have to handle in the account payable, minimum, basic. Now, anybody has any question? Please ask the question if you have. Anybody has any question? Hello?
Sir, in PO based invoice, there will be
Uh-huh.
a involvement of good, right, sir?
See, goods is involved in both the places. See, if you are purchasing non-PO based, doesn't mean that you are going to purchase only service. Goods is everywhere,
Okay. Okay.
correct? Either you'll purchase goods or service, right? Other
Yeah,
than
yeah,
that, what you'll purchase?
yeah, yeah, yeah.
But in PO based, you'll track that goods at the quantity level and at plant level minimum.
Okay, okay. Okay, sir.
Yeah. Anybody has anything to ask?
Sir, you're saying the reconciliation account, right? Is that GRIR, right? Am I correct?
No,
GRIR account.
no, that is separate. Reconciliation
Okay.
account. See here, what I'm telling, whenever I'll do the purchase, my purchase account will be debit if I'm purchasing from FB60. If I'm purchasing from the Myro, then my journal entry will be GRIR account debit, vendor account. Now reconciliation account means in the vendor master, I have to give one GL number. So that GL is known as a reconciliation account. Because like this Myro invoice posting I'll do for multiple vendors, 1,000, 2,000 vendors I will have. But all those 1,000, 2,000 vendors I can't show in the balance sheet. So for every vendor, I have to link one GL account in the master data. So whatever posting I hit to the vendor, it will also hit to the reconciliation GL. Okay. So that GL is known as a reconciliation GL. Let me show you one BP maybe. Then you'll understand. So reconciliation GL is a separate. I'll discuss in more detail. You'll understand slowly. I'll show you, but let me show you now. So at least that your doubt will be over. Okay, so this is my supplier number. This is my vendor number. Let me see for which company I've created. And this is my reconciliation number. So while posting, I'll be posting in this vendor. This is the code I'll be using. Okay. This is my Walmart vendor. So if I'm anything I'm purchasing, I'll make this vendor account debit, that I mean purchase account debit to this vendor, or Walmart vendor account credit. But when I post anything in this one, it will get back and posted to this one. Okay, so this is known as reconciliation GL.
So we have
Okay,
to
na?
link to every vendor.
Every vendor you have to link. That is mandatory. And this is known as a sub ledger. This is known as a main ledger also. Okay.
Okay, sir.
Or it is known as control account or reconciliation account. Is it clear?
Yes, sir. Yes, sir.
And you cannot do any posting directly into this account. You must post in the sub ledger level. You must post at the vendor level. And vendor will automatically hit to the reconciliation account backend.
Okay.
Is it clear?
Yes, sir.
So let me put in this way. Sub ledger. Let me put here. And main ledger. All ledgers or reconciliation, whatever you want to tell. Main ledger, general ledger, reconciliation, recon account, or control account. Okay, so let's say here you have Walmart vendor. So some code you'll create, let's say code one, some code number, some number will create, like you have for GL account, you have some number, right? So for vendor also will create some number. Let's say this is the number for the Walmart vendor. Walmart. This will get linked to certain GL number. Okay, let's say this is getting linked to this kind of GL number. Then you'll have another vendor code, maybe let's say Reliance INC. This will link to, you can link to same control account, same reconciliation, or you can differentiate, is also it's up to you and your business. Okay, best practice what we follow, all the domestic will link to one reconciliation GL, all foreign vendor will link to another reconciliation GL. So that we bifurcate it. All the private vendor we link to one reconciliation GL, all the government bodies we link to the another reconciliation GL. Is it clear? Hello?
Yes, sir.
Hello?
Yes, sir.
Sir,
No
for each
doubt,
vendor
right?
account group, we will create one recon account, right, sir?
Not necessarily. It can be different also. Under one group also you can have two reconciliation GL, three reconciliation GL. It depends. Let's say you created one domestic uh, vendor group, but in domestic again you have private vendors and government vendors. So for all, both are domestic only, but for private vendor you want to hit to one recon GL, for government vendor you want to hit another recon GL. So it can be different. Okay.
So in
Hello?
this case, how can we identify whether it is a private vendor or public vendor?
If you are doing any transaction, government, you know, right? Who is your government?
Yes.
Then,
Okay.
and you are a consultant, you are not the individual. So business will understand who for which vendor what GL they have to put. Okay. But at least we
Okay, sir.
can also see, right, who is our government body, who is not our government body, correct?
Yes, sir.
So tell me, Infosys is a government body or private?
Private. Okay, sir.
Anybody has any other question to ask? Anybody has any question to ask?
No, sir. For me, no.
So you understand what is called account payable?
Yes, sir. Yes.